Is it the end of Meta's streak of bad luck? After having the worst year in its history in 2022, Facebook's parent company managed to turn things around and become even bigger than before. Following a near 77% drop in its stock price in 2022, marking the worst year in its history, Meta devised a plan to return to its glory days and is now reaping the rewards of its efforts. In this video, you'll understand how Mark Zuckerberg's company turned the tide and what you can learn from this turnaround. After placing multiple bets on the so-called metaverse, even to the point of changing the company's name, Facebook's owner experienced the worst year in its history in 2022, as already mentioned here on the channel. Besides losing around $13.7 billion in a year, the company also, for the first time in its history, faced a revenue decline after years of consistent growth since its founding. To make matters worse, for the first time, it felt the impact of losing users, especially on its main platform, Facebook. This negative combination caused the company to lose nearly 80% of its market value in one of the biggest recent drops for a business, bringing its valuation down to around $200 billion. The fall was so severe that the company started 2023 by laying off 233,000 employees, equivalent to 22% of its workforce, in its first major downsizing. In addition, like other tech companies, Meta was hit by a market correction, partly due to the end of the financial euphoria during the pandemic and the rise in interest rates in the United States. Furthermore, the market also questioned Mark Zuckerberg's capabilities as a CEO, who until then had been seen as an expert in growth, but not in profitability. In this scenario, Meta had to rethink its strategies and take a few steps back to return to its glory days, which included reconsidering its focus on growth at any cost and emphasizing that it could also be highly profitable. Thus, it declared 2023 as the year of efficiency. The goal was to demonstrate that Meta not only amassed users on its social networks, but also generated a significant amount of cash with each one of them. After all, the company is a huge business. The first initiative after the layoffs and internal restructuring came to combat competitors and gain more user engagement time. The launch of Threads, Meta's answer to the old Twitter. The new network gained widespread adoption, attracting 100 million users within just 5 days of its launch. Although the new platform leveraged Meta's existing infrastructure, particularly from Instagram, its launch was still a significant milestone and expanded Meta's portfolio, adding yet another reason for users to stay engaged, with options for images, videos, chats, and now short texts. With a broader range of options, Meta's platforms became attractive again as the number of users started to grow once more. There was a 6% increase in registered users, with a total of 3.98 billion people having used Meta's platforms historically. Out of this total, 3.19 billion people are considered active users, representing an 88% increase over the previous year. This shows that Meta not only attracted new users, but also re-engaged previously inactive users. Together, the company's comeback is largely due to improved ad distribution and optimization on the platform. As one of the world's biggest showcases, Meta managed to increase ad impressions by 28%, even though it had a 9% reduction in cost per impression. This means that advertisers have a higher likelihood that their product will be exposed to potential buyers, which also increased the profitability of advertisers. This better return encouraged advertisers to spend more, helping to boost Meta's profits. The company not only improved ad performance, but also managed to reduce its operational costs. The reduction occurred in both ad delivery costs and what the company could do with its workforce, which was 22% smaller in 2023, but still managed to deliver more than the previous year. Thus, Meta literally managed to do more with less. In 2023, Meta improved its operating margin from 25% to 35%, an extraordinary performance for such a large company. To give you an idea of what this meant, Meta announced the highest profit in its history in 2023, $39.1 billion. It's worth noting that a significant portion of this profitability came thanks to massive investments from Chinese companies like Shine and Temu, accounting for 10% of the total ads on the platform in 2023. The profit built throughout the past year was closely watched by the market quarter after quarter, leading to a re-evaluation of expectations for Mark Zuckerberg's company. As a result, Meta, which started the year with a market valuation of around $200 billion, ended the year with a valuation of nearly $1 trillion, matching its historical peak. The growth was extremely significant, especially considering that while other tech companies also gained value during this period, the Nasdaq index rose only 40%, much less than the gain accumulated by Meta. And Meta didn't stop there. In the first months of this year, besides announcing record profits, Meta revealed plans for a $50 billion share buyback from the market, a move that pleased shareholders who saw it as a sign of confidence in the company's financial solidity and future planning. Moreover, Meta announced that it would distribute dividends to its shareholders for the first time in its history, offering 50 cents per share. It's estimated that Mark Zuckerberg alone received $700 million in dividends. This move was seen by the market as a signal of the company's maturity, and that Meta is now a company focused on wealth generation and not just on growing its user base and future expectations. In other words, it's also a stock that pays dividends. This news boosted what became the biggest rise for a publicly traded company in history, with $206 billion gained on February 1st alone, representing a little over a 20% increase in value. With this gain, Meta reached its historical peak, surpassing $1.22 trillion in valuation. Thus, it not only recovered its lost value, but also emerged much stronger than before, breaking the trillion-dollar barrier. These developments restored the company's credibility in the market and, more importantly, Mark Zuckerberg's strength, who at one point during the year became the third richest person in the world. Additionally, the numbers prove that 2023 was indeed Meta's year of efficiency. But not everything is perfect for the company. The much-hyped metaverse has yet to generate any returns from Meta, and sales of devices like Quest and Ray-Ban Meta are still negligible. Overall, the metaverse endeavor consumed $15 billion and has yet to show any signs of return. At the same time, in 2023, Reality Labs, the Meta division responsible for developing new projects, recorded a loss of $16 billion last year, $3 billion more than in 2022, which had already sparked criticism of the department. Despite this, Meta announced its new venture into the artificial intelligence market with Llama 3. The program aims to compete with rivals like ChatGPT and expand the functionality of Meta's existing platforms. According to the company, the big advantage of the launch is that it's an open-source initiative, unlike competitors like ChatGPT and Google's Gemini. The expectation is for an investment between $30 and $37 billion in artificial intelligence in 2024 alone. In other words, Meta is going all in on this new frontier. Despite all doubts, Meta turned the tide and emerged even stronger from the crisis. Now, the goal is to win the new battles that lie ahead. Will they surprise the world once again? Share your opinion with us.